So I'd like to say welcome. It's 11 o'clock and let's get started. So today, what I was browsing. I was browsing YouTube. One of the things came up in my feed. Well, yeah, came up my feed because I'm subscribed to Ken McElroy, and he had a very interesting topic. It's about 10 minutes, and I'm going to play what he said, and it is in reference to the state of Florida. So after the recording, I would like for us to uh, discuss it. Tell me, what are you seeing where you are, and how do you think is the best way to find an investment market? Okay. And for those who may be watching this later on, what strategy do you have in place to help you pick a market, a growing market, right? So let's go ahead. I'm gonna go ahead and oh, why it's not showing up? Uh, oh, that is it. That's it right there. All right. And I gotta make sure I enable the sound and video sharing. Yeah, optimize. Okay. So this is it right here. And it says something big just broke in Florida's housing market. Um, can everybody see this?
Yeah.
Yes.
Okay, great. Because I
You
can't
may
see
you want to
anyone.
maximize it.
All right. Well, I can't see anyone. I guess I don't know.
You
All
got
right.
to
So,
change your view, side by side gallery.
oh, oh, how about that? Huh? Um, all right. Let me leave that thing alone for right now. Let's go ahead and get down into this. All right. So I need to.
Florida just shot its
Now, can you hear what he's saying?
Yes, but
and it's
are you
costing
able to
real
turn
estate
it up a
investors
little bit?
big time.
All right. All right. That's on the max over there. Let me see. It's on the max.
On your
Okay.
computer.
Yeah, I got it turned up to the max.
Oh, did you when you shared? Did you share the sound?
Yeah.
Oh, okay.
Yeah. Uh,
We can hear.
so,
It's just low.
oh, really? Okay. All right. All right. So, okay.
So you probably know that there's many of the cities in Florida that are like at a 12-year low for sales and inventory at all-time highs. So Florida has been one of the hottest markets in the country for years. People have been flocking there for the sunshine, for the low taxes, and of course for the lifestyle. But the tide now is starting to turn, and not necessarily in a good way. So what happened, and how can you protect your investments before it's too late? And what can you learn from this? So let's break this down. So,
Hey,
like
Daryl,
anything, it's
whatever
all
screen you
supply and
have up
demand.
is
So, if you
black
go
in
back,
front of the screen.
Huh?
Whatever you were working on, it's black in front of the screen that you're trying to show. And we
Oh,
can see, and I don't know if I'm the only one, but I can see you and the video at the same time.
oh, really? Okay. Can everybody else see this? See what's going on?
I was split screen seeing you and Ken.
Okay. And you're able to hear?
Yes.
Okay. Cool.
for years, people have been flocking there for the sunshine, for the low taxes, and of course for the lifestyle. But the tide now is starting to turn, and not necessarily in a good way. So, what happened, and how can you protect your investments before it's too late? And what can you learn from this? So let's break this down. So like anything, it's all supply and demand. So if you go back to 2020, let's say around the pandemic, there were states that were losers and were winners. And Florida, since 2020, has added 1.5 million people. So that's what I would call the supply. And then their existing inventory or their housing stock or whatever it is, that's their demand. So you have a supply that all moved there during that period of time, and it created all these bubbles. And then we know what happened during that period of time. We had high inflation in 2021 and 22, and then we had the Fed jacking the interest rates, what corrected the real estate market. So that's where we are. So we had all these people, and then we had the shocks of inflation and, of course, the interest rates that went up high. And, of course, the interest rates that immediately made any kind of investing negative cash flow. So now, of course, we have an exodus of people, mostly investors, out of Florida. So why? So the very first sign to look for is the exodus of Wall Street or regular investors moving out of Florida. And here's why. This is exactly what happened in 2008. The very first people to move out of Florida, of course, are going to be the real estate investors because they rely on cash flow. And it's always the same model. It's the cost of the house plus the mortgage payment, which of course is high because of interest rates, and of course cash flow. So the very first people to leave a market like this will always be the investors, and that's happening right now, just like it happened in 2008. So the interesting thing about a real estate investor as well is they're not going to be as emotionally tied to the real estate. In other words, they're going to make quicker deals below market, and they're going to get the heck out of there because they don't know how far this is going to fall. The regular homeowners, of course, they're holding on because they started to take a look at the equity that they used to have, and that's all moving down each and every month. Now, not in every market, but in a lot of markets. Zillow predicts that over 24 markets are going to have negative growth in the next 12 months. So a lot of people are saying Florida could be the next California, and here's why. Because for years in California, people bought based on the future capital gain or appreciation of the real estate itself and not on the fundamentals. In other words, everything was capital gain based. Everything was based on the prices in California are always going to go up. Well, now we, of course, know that's not particularly the case, and now that's happening in Florida. But here's the real reason. So if you're investing in Florida or you've invested in Florida, you have to know that inventory is up, expenses are up, and occupancies are down, and concessions are also in the marketplace. In other words, when you have a lot of inventory, which is what it has right now, you do not have the rent growth or the price growth or anything like that that a lot of healthier markets might have. But now here's the kicker. And this is particularly what I want you to pay attention to, because this is happening not only in Florida, but across the country. So first, let's start with the headlines. Florida insurance premiums have doubled. Some are up over 300%, and that's if you can get insurance, just in the past couple of years. This is, of course, because of the hurricanes and the different kinds of things that have happened down there. So we're talking $8,000 to $12,000 a year in addition to what they used to pay just to insure a typical home. This alone has started to crunch any kind of cash flow and squeeze any homeowner that lives there already. The people that are tapping into their insurance policies and getting all these insurance to fix all these things from all these hurricanes and all these storms, the rest of Florida is now paying for that. And the insurance companies are charging that to the rest of the people in Florida, even if you didn't have any losses. So you may not have had anything wrong or any damage at any time on your residence in Florida, and you're getting penalized and paying for any losses for anybody that did. And that's just the beginning. The local municipalities are now also hiking the property taxes, especially in hot areas like Miami-Dade County, Tampa, and Orlando. And why? Because the state's growth hasn't been able to keep up with its current infrastructure, and somebody has to pay that. And the only person that can pay that now, of course, are the people that actually own real estate, and they tag this through property taxes. So this is already happening, and it's going to continue to happen. So you have insurance, and now property taxes are getting jacked. And by the way, this is not only happening just in Florida. It's happening across the country for the exact same reason. So guess who foots the bill? You, the property owner. Now let's sprinkle in the HOA problem or the homeowners association issues. Now, for those of you who may not know, that homeowners associations actually collect the money that they need to maintain the physical asset, and that gets charged equally amongst all the condo owners or homeowners in an area. Well, generally, these are managed by complete morons, and they have no idea how to run a business, let alone run real estate deals. And so what's happening is they're underfunding their homeowners association dues, and they have no money left in their reserve account. So when things are needed, like a parking lot or streets or gates or roofs or common areas or whatever it is, they bang the existing residents because they don't have the cash. And so those are called special assessments. Those are starting to come in now, and they're starting to piss people off. Even the governor has come up with a bill regarding this. You guys remember that Surfside building collapse. That was all a result of unfunded HOAs and reserves. Because if they would have had the money and they would have had a competent homeowners association board, none of that would have happened. And of course, let's not forget about all the legislation that's pushing back against investors themselves. Florida recently passed legislation restricting foreign ownership in that particular market. And whether or not you agree with it or not, the signal is clear. The state is starting to pick winners and losers in the real estate game. So let me be clear, cash flow is always king. And in Florida right now, between insurance, taxes, homeowners association, and of course, all the issues from supply, from after the pandemic growth, it's getting harder and harder to pencil any kind of a deal in Florida because of the cash flow, and let alone even break even. So when people are looking to invest in Florida right now, they are now seeing these higher expenses, higher HOAs, higher special assessments, flat rents, declining property values. And so people are pulling back and they're looking to other areas. So I've been investing for over 30 years, and I've seen states go through these boom and bust cycles. And the fundamentals always win. But when the property expenses outpace growth and income, then the music stops and it's done. And this does not look like it's going to stop anytime soon. So look what happened in California. Investors, they got priced out. At some point, people just relied on a capital gain strategy or for prices going up. This is exactly what's happening with Florida right now. So Florida's heading down that exact same path because the people are now leaving. They can't afford it. And the economics are just no longer making any kind of sense, especially for cash flow investors. And the canary in the coal mine is that the institutional and the investors themselves are already leaving. This is exactly why I say real estate is a local game. You can't just buy because a state seems hot. You have to go deep into the micro fundamentals of every single county, city, and state to really look at the nuances, to check out the cash flow before you even enter the game. So today, expenses, rent growth, supply, and regulations are all at risk. So how did Florida ruin its real estate market? Well, first we had the bubble, and now it's actually deflating. Second, skyrocketing insurance costs, rising property taxes, and now fees that are being implemented on the homeowner and the investor. Heavy-handed regulation on property ownership. And then, of course, structural risks and special assessments, which we talked about with the HOAs. And that all leads to decreasing cash flows, which makes people look for other areas to live and, of course, for investing. Because we are, as you know, in a huge affordability problem. And Florida is going the wrong way. You put all these things together and we're seeing a shift from what used to be a landlord-friendly state that's now becoming one that's tougher and tougher to invest in and to live in. But here's the mindset shift. Just don't follow everyone else. Follow the cash flow. If you're in Florida, just reassess your numbers. Look at your insurance renewals and look at your property tax increases. If the deal doesn't work today, it's only going to get worse tomorrow. Because trying to go backwards on some of those things that are now in place is virtually impossible. So if you're thinking about investing there, you need to get hyper local. Find submarkets that have less exposure to some of these insurance shocks, property tax increases, HOA problems. And of course, the most important thing is to look for strong rental demand. Buy on fundamentals, not emotion. That's how you survive the shifting markets. That shouldn't be your only concern because there are many collapses that are catching a lot of real estate investors off guard today. To find out why,
All right. So he said a lot in that video. The one thing I did want to check was the population growth, like he said, 1.5 million. And what I did, I want to know when he said 1.5 million, I wanted to know exactly what was that the net growth. So, and sure enough, when although he's saying 1.5 million people came in, I want to know how many people also left. And during that same time period, and he was correct about the numbers, but during that same time period, 500,000 people left Florida. And that would leave a hardship, not a hardship, but it would make it more difficult for that 1 million, because although it's 1.5, but 500,000 also left. So that would make it difficult for those people to look for properties. Now, so Florida, like, is starting to shift a little bit. And I try to keep my ear to the ground. Try to when we underwrite properties, I try to go. Matter of fact, I don't want to say what I do. I want to hear from you. I want to hear from you. I want to hear what you do. Okay. I think everyone here knows what I do, right? But I want to know what you do. He said something in reference to real estate. He said real estate is local. You have to go micro. And I believe 100% that's the truth. So I would like, first of all, I want to hear what you have to say in reference to what he's talking about for Florida. And what do you see? Do you see insurance going up where you are? Do you see taxes going up where you are? Do you see people leaving where you invest? Do you see people coming in where you invest? Right? It's not happening just in one location because, insurance companies, yeah, they may have to increase their rates in Florida, but they're going to compensate this. You know how they do. They're going to raise rates everywhere. Don't think it's just going to be in Florida. It's going to be everywhere. So they got the money that they're losing. They got to get back. Am I right or wrong? Right. So tell me what you're saying. Uh, what's your thoughts on Florida? Like you said, look really micro. But how do you pick a market? How do you pick a market? Tell me that. Come on. Oh, turn on your mic and come out from behind all them names and all of that stuff. All right, then. Thank you all for coming out today. And I will see everyone back here
Yo,
next
Darryl,
Tuesday.
I
Because
was
if
on
I'm
a
not going to
call.
talk, I'm out.
I was on a call recently. Hey, first of all, thank you, Darryl. Good morning, Alicia.
Good morning.
I was on a call, a Keller Williams call recently, and these was the full Florida folks, and one of the things they were talking about, or was complaining about, is that a couple of deals blew up because of
He froze.
He froze?
Yeah.
Oh, man. Finally had someone to talk.
Well, I didn't go because I was trying to let someone else talk before I started. So I'll fill in some blanks until Marcus comes back and talks about
Okay.
Florida.
Okay.
But here in Arizona, I have seen a shift in the market, not necessarily because of the environmental concerns, but more investors are focused around the numbers, which is what your speaker was saying. I think, what was his name?
Ken McElroy.
Okay, yeah. Um, they're more focused on the numbers, and they're coming in lower, which has been interesting to me. I know how conservative our numbers are,
Mm.
and how we look at different things.
Right.
So if you take a state of Washington, I'm in Arizona, but I also do business outside of the state. But if you take a state as Washington, in certain areas of Washington, there have been environmental concerns, way back in the day with oil and all of this other stuff. And so people, even today, even though these buildings are 100 years old, and different development has happened on the buildings, different improvements have happened on the buildings, people are still wanting the phase ones, the environmental studies, and they're focused on the real nitty gritty of the numbers. Do they make sense? Are the rents where the owners are saying? Are the expenses where the owners are saying? They're demanding the statements, the historical statements, even going back a couple of years. So that's the main shift that I've seen here in Arizona. We're still growing. We got a lot of land. We have a lot of people moving here. Our weather is nice. I mean, we did talk about the monsoons, but multifamily, even though people have seen numbers go down, is still doing very well here. Retail is still doing well, even though some of the retail numbers have gone down. And when you look at office is still moving. They may be repurposing it, they may be reimagining it, but it's also still moving here in Arizona.
Have you seen, now you and I, we did the acquisition summit and everything. We was out there in Arizona. We toured several properties in Arizona.
Yes.
Our numbers just wasn't panning out to what they wanted, right?
Yeah.
We started looking everywhere else because we wanted to hurry and try to get this deal to get everyone in. We was in Texas. We were looking here, looking there. It wasn't panning out. Since then, have you seen anything that says those prices are coming down?
Yeah, the prices are coming down, but so is the underwriting, right?
Oh, okay.
What I've seen over the last at least 2 years, right?
Right.
When we put in our offers, I've seen multiple properties actually sell for what we initially offered. It took them a year, 18 months to get there.
Yeah.
But I've seen it. One of the properties that was on Broadway that was listed for like 3 years just sold. So it's owners, sellers are willing to hold out for their number until they see that the numbers are falling to like where their bottom number is, and they're selling for just above that, right?
Right.
Or you're seeing some creative offers. Like I just got a creative offer where a buyer wants to purchase a property. The seller was willing to do seller carry. So his offer was $1 million under asking. Well, just under $1 million under asking. He's putting down like 10% for the EMD, and then he's going to finance the deal, but he's asking the seller to carry 300,000, and the seller will get like 14% interest over 3 years, right? And so you're seeing things like that where investors are being more creative in their buying strategy. And you really have to understand what a seller wants, in order to come to a conclusion where both sides are winning or feel like they're winning. And if a seller just wants mailbox money, maybe you do a little bit of financing with them so that they get that, and then they get a balloon payment in a few years.
Excellent. That's definitely something to look at.
Yeah.
I would definitely say that.
Hey, Darryl. Morning. I
Moses,
was waiting.
Moses,
I was
Moses, let me get back with you. Marcus is
sure.
back. Give me one
Oh,
minute,
okay.
and let me let Marcus just jump in right quick.
Oh, I appreciate that. I thought you clicked me off.
No, it wasn't me.
No, it was the internet here. That's what it was. But what I was saying was, I'm gonna piggyback on what a lot of what Alicia was saying was, we'll find out. Especially, I'm gonna use the Florida market because that's what we were talking about.
Right.
They're rezoning. The zoning is changing in a lot of places. So where you would normally go in Tampa or one of those places where those big cities where you normally will go and go buy property because you felt it was safe, well, you need to go check the zoning because they changed, especially after Tampa got flooded last year. Damn, the whole city got flooded. So now they're putting up different demands. A lot of the places now are starting to put in more tenant protections and stuff in these red states. In the red states. And like you said, everything is local. It's not the state itself, it's the towns, the villages, the cities that's putting in these protections for the tenants. So you have to do more due diligence up front for the investor
Right.
to know what is the rules of the game in that particular area where you want to invest in. And like you're saying, like Alicia was just saying, a lot of folks are saying to the property owners, I'll give you your price if you give me my terms.
Mm.
And they sit back and they work out these terms and stuff on, because at the end of the day, the owner, if the person don't live up to the obligation of what they agreed to, the owner could take the property back and still keep the money. So
Correct.
a lot of owners are starting to realize it's a win-win for them because they could still pay basically foreclose and take the property back.
Right.
The other thing that we found out is that prices, like Alicia was saying, the owners have this number in their head. Some of them were very unrealistic, and other ones just say, I'm waiting until I get this price until they come up on that deadline or whatever is going on in their personal life that they have to now make that decision.
Right.
And like Alicia said, 9 out of 10 times they go back to the original price that someone like her offered 2, 3 years ago, or some cases they get even less money. They even get even less. And I came across where they were getting less on this warehouse deal in South Jersey Bayou. The owner ended up taking out less because he had to, because he was getting a divorce and he had to pay out the wife in order to meet his obligation. So he lost money on his side. She made money on her side, but he lost money on his side because he refused to, sell because he was holding out. The last and final thing we're coming across is financing with the rates, like Linda said, like Alicia said. Not only are the banks becoming or finding out that they're becoming tighter on their underwriting and their restrictions. Some people just can't afford the 6 or 7% because they don't have enough, including doing all the repairs and operating the property and stuff on there. So, like he was saying, is definitely the point where you have to do a lot more due diligence. And as a realtor, on the realtor side, they're holding realtors more accountable because they felt that we should have known whatever due diligence they didn't do or they lacked on or lacked to do on their side, even from their attorney or whatever, they're trying to hold the brokerage. And my brokerage here in my market center, this is on the residential side, they're going to court now because of that same situation. The homeowner felt that the agent should have known X, Y, and Z. It really wasn't in the agent's realm of knowing this particular information. And the homeowner has an attorney, and the bank sent the inspector out to this house. But because this homeowner's losing money and stuff on this deal, they have to blame someone. So, and like you
Yeah.
said, it's more due diligence and stuff up front on there for everybody. It's not just there. So,
Gotcha.
yeah.
Wow, that's pretty deep.
I'd like to
Yeah.
quickly say, you agents that are watching this, documentation is very important.
Absolutely.
Being
And,
thorough.
and I'm gonna add one more thing
Yeah.
to that. Matter of fact, when I come off my restriction, because I'm still on medical restriction. I'm going to sit in the class because of what Alicia said to make sure you have your papers in place because the brokerage is now, my market center is making all the folks sit through this class because they're being sued or situations where they are borderline of being sued because the agents are not documenting the things properly and stuff on
Yeah.
there. So
Wow.
they're
Dates and
making everyone go through this class and stuff. So even though it's residential, I'm still volunteering myself to go and stuff and sit through it because a lot of the residential you can still do on the commercial side and stuff on there.
Correct.
And what's happening is I'm finding out there's one last point, and folks who's dealing with, be careful because the residential agents in my office are trying to do commercial transactions and they're effing it up, excuse the language, but they're effing it up. And now they're finding themselves in court and they're finding two things out with the reality that I was told by both of you guys a long while ago, especially when I came on the Keller Williams. A, if your market center find out it's cheaper to fucking throw you under the bus than to pay out to the other side, guess what they're doing? That's what's happening with them. That's number one. They're getting the reality check. So all this laughing and cracking and joking with my broker record and all this great going to parties, hanging out. Now they're finding out the business side of the business decision being made. That's one. And number two, they shouldn't have did the transaction from Jump Street because they didn't have enough knowledge about the deal. That's what they got in trouble for. Got them in trouble at the point where they're in court now and they're finding out that the OEM insurance that the residential agent used doesn't cover commercial transactions.
Wow. See there? See there? But for
Absolutely.
how long have the commercial brokers been telling the residential people to stop doing it because they was putting the market center in a big risk? How far back does that go? And it's now as the saying, the roosters coming home to roast, or however that goes. You know what I'm
Yeah,
saying?
they don't understand because in some markets, and I'm sure Moses can speak to this too. In some markets, you have to have a broker's license, all the agents, and then in others like mine, all you have to have is a real estate salesperson's license. And
Right.
people think that you can do both. I've been told multiple times, hey, my license allows me to do both. It does, but your license also says, the state also says that you need to be an expert in whatever you do for your clients. And,
Yeah.
Absolutely.
KW says, you don't learn on your client's dime. So it's really important as investors that you understand your market. And if you don't understand your market, you get in alignment with a professional that understands your market.
Yeah, you're right about that. Wow. Moses, go ahead, Moses.
All right. Hopefully, I don't know. My internet's been acting up for the last couple of days, but so first off, don't know. I don't want to sidetrack my thought process, but the fact if you carry the trade name realtor, by code of ethics, it's a $15,000 fine if someone practice in an area that they're not competent. That's the code itself. A realtor must be competent in the area of practice. That's no state law, no, not that's just by the code. So the fact if you find anyone practicing and you think they mess up a transaction, you can take them in, either the public or another practitioner, saying they're practicing in an area that they're not an expert. And then you got all the other bells and whistles that comes along with it. But Ken McElroy, I mean, he's been around for years.
Yeah.
I don't know where his girl is now, but look, a lot of the speakers trend with based on what's happening, and they come up with all these things. You got Nick that has that app that goes crazy about Florida for years, and none of them are hitting it like on the money, But he's giving some good fundamental. Like I have markets in Tampa, Riverview that I can go now, and they're cash flowing like king. So you just have to know, like you said, we always teach from a realtor perspective. It's real estate is always local, right? So if you know the local market where those costs are not affecting, then you could still make money. Like there's some rezoning that happened in Riverview, specifically Hillsborough County, and you could go up to 4 units now on a 1 acre. That's a huge, and all you do is you could put four, manufactured home on there, and now you got 4 units going on a lot, and there is no HOA and all that nonsense to kill. Your insurance is cheap, and you can just cash flow like king. You buy, you put one in, and you could cash flow fairly good. So you just have to know your market. The other thing is, 1 second. Sorry, let me get that call off. The other thing is, I'm building a plaza right now in Tampa. As much as you got all this going on, and I always thought it, the cap rate has a lot of metrics to it. It's not just the multiple of your value.
Mhm.
If you have a low cap rate area, it also means that market is hot. That's why the cap rate's low. You have to keep that in mind. It just, we always learn like, oh, it's a return on your annual investment and all that. No, but there are a lot more to cap rates. So you have to know all the fundamentals and then pick your market to make sure you know where you're going. Now, there are some areas in Florida that I know since January I've been watching, and I said this market has turned. So you got to be very, very careful where you invest. I mean, I know Neil Bauer has a whole bunch of stuff going on. He has his legacy hole somewhere down in the Fort Myers corridor, and I've watched a lot of big new syndication went down on the West Coast, and then a storm came and really floored them. So, you got your danger zone, but you got to stay central. You got to know the market locally, and you could still make good. But Ken's good. I mean, he give good warning signs, but there are opportunities within all those negatives that you can come out ahead.
You're true. That's true. So now ask the question: how do you pick a market? What do you do? What are some of your steps that you take to pick a market? So let's discuss that. Casimir, how do you pick a market? What do you look for in your market, and what is it that make you say, yeah, I'm gonna buy here?
Thank you. So there is the real estate market analysis that you have to go through. Make sure you understand the population, understand, I think, what are those 4 basic things? Population, income, job growth, what is crime? So there are some metrics that one has to look at in order to see if that market meets your own criteria you have set for yourself.
Yeah. He said 1.5 million came into Florida. I think I really wonder what's the age of those people. Of that 1.5 million, what is the breakdown by age, the ratio there? Because I don't believe it's all 1.5 million retired people. You know what I'm saying? I just don't believe it's 1.5 million retired people. So now my next question is, are there any companies leaving Florida? Are there companies coming into Florida? Right? Because if you're going to still have, or it breaking even, no companies leaving, no companies coming in, right? So out of that 1.5 million people, I'm gonna be honest, I don't know what the percentage, what the percentages are. I don't know what the percentages are. That may be seniors, and I'm going to say seniors that are 65 and older. Okay, 65 and older. That's not looking for another job. When they get to Florida, they're just going to go fishing, sit on the beach, do whatever. Okay, those you don't have to worry about for a job because they have their Social Security and whatever other income. But the rest of those people that's coming down, are they all wealthy enough to where they don't need a job? I doubt that too, right? They're going to need some sort of an income. I think, so the reason why I mention that is when I look at a market, and again, I think everyone here just about knows how I do it. I do go local. I do. I go very local. I go local to the neighborhood because everything may look fine, and this is where you'll understand why I don't use an MSA. Everything can look fine in the MSA because the MSA, first of all, what is MSA? What does that mean? And I'm not giving a definition. I'm just going to describe it. MSA is a collection of the local areas around it. Okay, and the MSA can have, they show beautiful numbers, man. I mean, everything's growing, going up, boom. You know what I'm saying? But when you break that MSA apart and you go into that neighborhood and you ask yourself, what is the growth here in this neighborhood? What's the income in this neighborhood? What's the population in this neighborhood? Find all of that out. I'm gonna tell you that right now. The same way you're gonna look for what a city population is, state population, growing in this. I'm gonna tell you right now. Look at the neighborhood. Look at the neighborhood. Are people getting the heck up out of that neighborhood? Right? Everything. So everything you're gonna do at the top level, check at the lower level. Check at the lower level. Okay. Try to stay in that neighborhood. Now, I don't want to get all into all that. I'm gonna stick on the insurance. Let me regress because now I'm starting to feel like I'm getting more into a teachy preachy mood. I don't want to go there. Okay. But I don't know, I may have to touch there a little bit. But the whole point of what I'm saying is maybe we need to start like if we looking at Florida, maybe we need to take a few steps ahead and build that relationship with the insurance person that you're going to get an estimation from and talk with them directly. I'm looking at investing in, say, Gainesville, Florida. What's the insurance? Are the insurance going up there? And if so, is it worth it? Taxes, are the taxes going up? Check with the local tax authority and see how taxes are doing. One of the things that I do, which maybe it's a waste of my time, is, and I invest in Houston, or I invest in Texas. I like to go back several years, like at least three, we may go back 3 or 4 years to see the trend of the taxes in Texas. And it's really easy to do. So, and by me doing that, I could see, okay, so they went down in 2022, it went up in 2023. Wow, it went back down in 2024. It's going up in 2025. but that lets you see how things fluctuate when it comes to the taxes, what you're going to be paying, and so forth. So take a when you're searching out for your taxes, don't just automatically. I'm telling you the truth. Don't just automatically say, okay, 85% of my purchase price, 2.5% for increase, blah blah blah. Don't put a little more effort into this. Go back a couple of years, take a look at the taxes, what the rate is, and then try to get an average of where you can definitely approximate what the tax rate is going to be. If you notice that your tax rate is a little lower than 2024, but you notice in 2023 it was up, 2022 it was down, then you may want to say, okay, if in 2024 it's 2.4, I am going to go to 2.5 because majority of the time taxes wind up going up eventually somewhere. Okay. And if you are an investor in Texas, that's because you may hear Governor Abbott say he's going to do away with property taxes. That don't mean he's going to do away with commercial property taxes. Okay, so don't get too big of a smile on your face thinking, wow, I ain't got to pay no taxes. Wrong, you will be. Okay, but so, okay, that's enough of that tantrum right there. So the question was, what do you look for in your market? What is it that will draw you there? One thing also Kim McElroy said was cash flow. Cash flow is king, right? I'm not into appreciation. I don't buy properties for appreciation. Okay. Now, of course, appreciation comes with it, but what I'm saying, we want cash flow from day one. Okay. So what is that you look for when you're looking at a market? What do you scope out? Okay. How deep do you go? All right. Kenneth, can you tell us a little bit about how deep you go?
Recently, I've just been looking at secondary markets because I got tired of the competition and the pricing in the bigger markets. So I've been making relationships with brokers in the smaller areas, usually 30 to 50 miles outside of a main city. And I've been
Right.
building that relationship and talking to them and what they look because they're longtime investors. And I follow Ken quite a bit too because he's got a lot of good information. But uh, I usually go what you taught me over the few years we've been together is looking at the crime, looking at the history of population growth, income growth. Was it going up, going down? Has it been fluctuating? So
All
not
right.
really looking at properties. I'm looking at the areas in smaller towns. And I'm looking at smaller properties, 75 units and under.
Gotcha. Gotcha. Okay. Okay. And you haven't come across nothing yet, huh?
It's more of a learning process right now. I have some personal family situations been going through. My wife had a heart attack here about a month ago, and
Oh, sorry to hear that, man.
she's doing fine, thank you. And
All right.
so it's more of an investigative thing right now. I'm not in any rush to put any money out right now.
Okay. I got you. I got you. It's 11:51. I have three brokers here. And I would like for each of the brokers to give us some parting words of of advisement for new investors, seasoned investors. I don't know, for everyone. I really would some parting words. If you want to focus on the new investor, so that try to keep that person out of trouble, let's do it, right? But I'm gonna ask that we have three brokers here, and I'm gonna ask you to give that new. And I'm going to say that give the new investor that's coming into this, give them some words of wisdom. that can help them. And I'm gonna kick this off with Alicia. Alicia, help us out here. Give some words of wisdom.
Um, it's interesting. So, words of wisdom to a new investor. So, the first thing I would say is you're not alone. Do not do this by yourself. That's the first thing.
Right.
Second thing is know your numbers, because Kim McRoy said that multiple times throughout the recording that you shared. Um, it's best to be conservative. Many times people can put pride. Maybe they've told everybody, hey, this is what I'm doing, and they feel the pressure that they need to respond. Well, that pressure could be a costly education for you. So you want to take your time in doing this, and maybe you don't tell everybody right off, but you be strategic in who you tell, those people that support you. Um, Build those relationships with not just investors, but build them with the support team, the attorneys, the CPAs, because you're going to need them, the insurance guys and ladies. Um, and then reach out to your local, because real estate is local, politics is local, everything's local. It's going to affect you at the grocery store before you go on vacation. So if you think locally, get those relationships local with the support team. Know your city, know the officials that are in your city, know the rules and regulations that are happening with AI now. It's not difficult to learn those things. Um, and then think leverage, but also think legacy. Don't just think about what's happening right now. Where do you want to go? What are your 12-month goals, your 3-year goals, your 5-year goals, and what are you going to leave behind? And what do you want to be known for? And then lastly, I would say we're all here to give, you know, come from a place of contribution. Don't just think, I want this for myself. Always think about, what's happening in your neighborhood. Is there an area that you can give back? Is there a building that you can purchase? Because there's a lot of slumlords out there. There's a lot of, and I'm not just talking about multifamily, also in retail, also in industrial. There's owners that just don't take care of their buildings. And, most of y'all know I love buildings, and I hate it when people don't take care of their property. It's really simple to do. You just got to pay attention. And so I would say, pay attention to what you're doing, and value what you do.
All right. Thank you. Thank you, Alicia. Thank
You're
you.
welcome.
Marcus, you're up.
Well, I'm just going to piggyback off what Alicia was saying, and I'm finding out as time goes on and I'm dealing with different folks. Definitely take the time, like Alicia said, to educate yourself. Understand what you're doing and know what you want within real estate. If you want commercial real estate, what aspect of commercial real estate you want? Do you want multifamily? Do you want retail? Do you want industrial? Do you want to do land and develop land for commercial real estate? I had one potential guy to take it on as a client, and he wanted to buy up lots in urban areas because he wanted to build 40, 50 unit apartment buildings on the land. But he didn't know anything about the entitlements. He didn't know anything about getting permits. He didn't know anything about getting to going to City Hall and finding out if there. He didn't check with the what was the person, and this happened to be in Newark, New Jersey. There they have the mayor, then they have the council people, and the council people have their districts, and in those districts they have district leaders. Well, he didn't understand that you need to talk to those folks, the district leaders, so they won't be going to your, when you up here trying to present your property to the zoning board, they won't be in the audience against you for that. You need to understand all that. So like they say, politics is local. The other part is you need to understand where you want to actually buy your properties at. Like, and I learned this what's the name said earlier, as because I'm one of Darryl's mentor students, and one of the things when we was in Texas, when he was riding us around, it was amazing how you went from one block over, and the whole dynamics of the area changed. And I'm not trying to say from nice to hood. It was from nice to all right. Then it was hood. Then you went on the other side of the tracks. You really saw the hood. And that was like when I understood when he said, if you can't do it, you have to have boots on the ground to look at what's in that property. So know where you're going and where you want to invest. And because I'm finding folks that's come up and they wanted, is one gentleman wanted to lease a property, and when I gave him the list of things he wanted to lease this property for his restaurant, he was flabbergasted. He was floored. He thought I was full of crap when I told him you have to give us your tax returns. You have to do it because the landlord wants to know if you're credible enough to rent from. He doesn't want to go through all this negotiation, all this trouble, and then a month, 6 months, you're done and you're out of business. Now he's stuck with this property again. So educating yourself is a big priority in there. And like you said, location trumps everything else. And then other thing is be conservative with your deals.
Yeah.
Presentation. Like Alicia said, be conservative, be cautious. It's always easy to ratchet down, but try to ratchet up is the issue. So be conservative with your numbers and stuff on there. And the last thing I want to say, I took this advice from Darryl and Alicia, from other folks here. I paid this particular attorney does a lot of commercial deals all over the place. And I've seen his social media. He's connected with the senators in my state, because I'm in the state of New Jersey. He's connected to the 2 senators. He does a lot of deals. And when I go on the calls, the zoning board calls for various towns, he's always on these calls presenting a project for his clients. I paid the $200 to have a 1-hour Zoom call to not only understand the process of getting the property off the ground, what you have to do, but also understand the politics and stuff, and to get to know him. So he know me face to face and my name and stuff, because guess what? He deals with so many people, contractors and all this stuff. I already have 2 referrals from him out of 1 Zoom call already. So that $200 was worth every penny of it.
Yeah.
So as like Alicia said, get to know the people who you're going to want on your team and have a book ready and go before you start looking at deals and stuff and all that. And take your time. Don't rush into it, because I've seen a couple of folks rush into it and they crashed and burned with their deals because it didn't pan out the way they thought it was and stuff like that.
Yeah.
So that's my 2 cents, Darryl.
All right. And I know it's 12 o'clock, but let me just I want to get Moses in. Moses, any parting words?
Now, I mean, 2 brokers spoke and they basically covered all the subject matter. But I think one thing that resonated in me when I started out in this business was, and it's just my principle when I teach, I tell people you're the best manager of your money. So don't expect anyone else to do the best job for you. You need to know the fundamental. You need to educate yourself. And until you can prove to me that you understand the business to a great deal, then you will be able to get the help you needed from others to help you propel. So you have to make sure, with all the other stuff, legislative and all that comes with it, those are due diligence you make, but you got to make sure you spend the time and know the fundamental in this business before you look at our Zoom today. I remember when the Zoom was like 50, 60, 100 people, but a lot of folks come in, they what was Warren Buffett's famous saying? If you can't figure out a way to make money while you are asleep, you will die working at it. So those are the motivation that you want to motivate yourself. All right, I don't want to die working. Let me figure out a way. And multifamily real estate is the way to go, but you got to make sure you educate yourself.
That's true. That's true.
That was good, Moses.
Yeah, it was. That was excellent. Excellent. Okay. I'm just gonna keep mine short. I just want to say something short, right? What I'm going to say to the new person is, and this is some of the things that I had to learn, and I'm going to speak to you from experience. All right, I'm not speaking to you from a book. I ain't speaking to you from philosophical ness or whatever. I'm coming to you from experience. I'm going to tell you, don't pick no more than 2 markets, no more than 2. This business is a relationship building business. For the new investor, you think you can work in markets all across the United States, but there's no way you're building a relationship with all those brokers across the United States. It's just not happening. Build your relationship within the market and go as local as you can to see how that neighborhood is doing. Okay, before you start buying buildings or whatever in real estate. Know the market better than the people that, if you don't live there and you're coming in, know the market better than the people that even live there. No one should be able to tell you anything about that market that you're not already aware of. Okay? All right? Know your numbers. Okay? And for you new investors, I know that you're anxious. I know you want to make that deal. I know. I wanted to make that deal. Matter of fact, I did. I remember my first deal. It was in Oklahoma, Tulsa. I made a lot of mistakes, y'all. A lot of mistakes. I'm telling you right now, don't make the mistakes that I made. Okay? So, in closing, no more than 2 markets. Know that neighborhood. Get to know your insurance person. Build a relationship with the lender. And definitely build a relationship with brokers. And if you need any help, we're here at the Commercial Underwriting Show to help you. That's my closing statement. And y'all have a fantastic week. And I'll see everyone back here next Tuesday at 11 o'clock Eastern Standard Time. And bring those 100 people that Moses mentioned.
All right, absolutely. Thank
All
you,
right.
Darryl. Appreciate it,
Thank
brother.
you.
Thank you.
All right. Stay cool, y'all.
Take care, guys.
All right.